I would want us to discuss, ladies and gentlemen, a concept called what here? How do we compute goodwill? How do we compute goodwill? How do we compute goodwill in group reporting? Now, for the students that I'm teaching financial reporting in section 3, the students that I teach financial reporting in section 3 at RCM Online College, there is a video that I sent to you earlier on, which showed you guys how to compute goodwill. Were we able to watch that video? Just a particular video to show you how goodwill in group account is computed. Were you able to watch that video? It's a 5 minutes video. Were you able to watch that video? Somebody, Simon and Asema, yes, is it only one? That class is quite a big one. Is it only one student who has been able to watch that video? Only Simon? Remember, I will always try to send you smaller videos, right? As a precursor to what I teach over these lunch hours sessions. I send you a video you watch so that I avoid this issue of coming to do definitions, etc., etc. Oh, section 6. Mercy, I'm not the one who is teaching section 6, but I will be able to see what I'll do. You know, you guys, I taught you very well in section 3. I taught most of you guys very well in section 5. You passed, but now you went to section 6 alone. You left me down. How comes you guys never took me up with you? Yes, this is very okay for advanced level. For advanced level students, this is the best because I know some of you do not have good basics of group consolidation. And those basics are normally put in very well in section 3. There are things, of course, as Mwalimu does them in section 6, you'll not even be able to understand. Actually, if I were you and you are doing CPA section 6, I would request Mwalimu like myself, you join all my group consolidation classes. You'll become very nice, very good in whatever. So Lucy is saying, Mwalimu, come and join us. Let me think through that, whether I'll be able to graduate. Sasa vile mjaona your video, where do I start from? Because I made an assumption that all of us were. Let me just tackle the question straight away ndio tupate time ya kwenda kula lunch. What are we told here? On 1st July 2018, Beyond Limited held a number of insignificant investments in equity instruments that do not have a quoted price and are therefore carried at cost. During the year ended 30th June 2019, Beyond Limited acquired a subsidiary company, Horizon Limited, and an associate company called Sky Limited. The CPA Section 3 students, please never ever read anything to do with the associates now, moving forward, because in the new syllabus, they have made things very easy for CPA Section 3 students. Section 3 students here moving forward, for Section 3 students moving forward, in your group accounting, we'll only be talking of a parent and what your subsidiaries, and that is why your studies are quite easy now, right? So ignore anything to do with associates. Now, what do I want to do? I want to do something very easy. Look at note number 1. Beyond Limited acquired 80% of the ordinary shares of Horizon Limited on 1st January 2019. The purchase consideration was made up, tuachana na hiyo maneno. Mwanzo kabisa sana nimepata kitu 80% was acquired. Beyond Limited, and then we have Horizon Limited. Great. So the first thing that I will do, because down here they have asked me to prepare consolidated statement of financial position. They want me to consolidate. I know in consolidation, they are what we call the big 5. Have you guys ever heard of big 5 animals? In these animal kingdoms, have you ever heard of the big 5? Have you ever been to Masai Mara? Big 5, who can name for us those big 5 animals? The big 5 animals. Big 5 animals. Usually using chukua dakika 10 kuifanya. So like rhino, big 5. Wanafunzi wangu watembe. Elephant, big 5. Who is this who has forgotten the king of the jungle? Lion, yes, lion. And for us, the king of the jungle, if you get this wrong, automatically you will get 100% of your consolidations being wrong. So the first thing that you need to do, the first working, is the working of what here? Group structure. How does our group look like? How does our group look like? Like now here we are told that we have a company called who? A company called who? A company called who? I've forgotten the name. I've forgotten the name. You guys should be able to remind me. It's called Beyond Limited. Beyond Limited acquired who? Beyond Limited. Beyond Limited. Beyond Limited acquired who? Acquired Horizon Limited. Horizon Limited. And they never acquired 100%. They only bought 80% of that company. So there is nowhere they have told us that Beyond Limited ceded their control to any other party. So 80% is quite a huge percentage of ownership. So 80% is more than 50%. And because they have not mentioned anywhere, any language about them formally ceding their control of Horizon. So you're saying there that Beyond is in control of Horizon. So it's able to help Horizon make decisions because they'll be able to send directors. At 80%, they can even send all directors. If Horizon has got 5 directors at the board level, these guys here at the AGM can decide to vote for all the 5 directors. So basically, Beyond is in control of Horizon. And therefore, for you to be able to demonstrate deep understanding of the subject, you say therefore Beyond equals who? Beyond is apparent. Beyond is apparent. And the Horizon is what here? Is a subsidiary. Is a subsidiary. Is a subsidiary. Is a subsidiary. I'll not even bother in this particular class to talk about associate because today's objective is to show you how to get goodwill. How to get goodwill. Goodwill. Now, so I've been able to say here, a nice thing that will make my examiner know that he's marking a paper of a very bright student, that Beyond the company is apparent and the Horizon is what here? Somebody? A subsidiary. So first of all, up to there, are we together? Are we together up to there? 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 Great wall, yes. Chebi, yes. 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 Now, from there, then, what I'll do, I'll come and mention here Doa, and the DOF. These are very important dates for me. Doa is the date of acquisition. Doa is the date of acquisition, and the DOF is the date of financial statements. For your exams, you'll be writing acronyms. Acronyms. You'll be writing a DOA and a DOF. But please, I've always seen this, and this is how I get to know that I'm marking a script of my student, even at CASNEB. Utapata mwingine ameandika hivi, at DOA. That now means something which is what here? Very different. It is DOA and who? DOF. So have you been able to write somewhere there that DOA stands for date of acquisition and the date of financial statements? Have you written somewhere there? Have you written somewhere there that DOA in full stands for date of acquisition and date of financial statements? Yes or no? Yes or no? How I wish I could get students who are talking to me. How I wish I could get students who are talking to me. DOA is date of, great. Date of acquisition and the date of what year? Financial statements. Thank you very much. Thank you very much. Now, in this case here, when did we make this acquisition? When did we make this acquisition? We are told on 1st July 2018. Beyond Limited held a number, no. Beyond Limited acquired 80% of the ordinary shares of Horizon on 1st January 2019. So the date of acquisition is 1st January 2019. So we have here 1st January 2019 ndio date ya kufunga arusi. Sio ndoa lakini ni date of acquisition. Then go to the financial statements given there and then give us the date of the financial statement. The date of the financial statements. On Uzuru online class, you are able to see even what the teacher is reading. Very easy. Unajua kwa physical class utajua niko wapi. Ukisinzia kidogo utajua. Lakini hapa sasa nakuja straight away. Niongeze kidogo. Nakuja straight away hapa unaona mwalimu anasoma. Kama hapa nakuonyesha the date, they have given me some financial statements. They have given me some financial statements here, right? The draft summarize statements of financial position of Beyond Limited and its subsidiary as at 30th June. You can see the date of financial statements. You can see the DOF. It is 30th June, 2019. 30th June, 2019. 30th June, 2019. So you can see our year, financial reporting year is ending. You know, the financial statements year is the date of your year end, financial year. So then it means that in the financial year, we stayed with this subsidiary for how many months? How many months do we stay with this subsidiary in this year of financial statements? Lucy anasema 6. Great Wall anasema 6. There is something about a pattern which is very important. And of course, for those of you who know Mwalimu, you know where I work. You know where I work. I am a group accountant. I am a group accountant. So every day when I go to my workplace, every day I get these things, DOA, DOF, consolidate. I don't know any other language. I only do group consolidations. And fortunately, I do group consolidations for big companies, blue chip companies. I do group consolidations for EABL, KCB, I&M Bank, right? And many others. So there is nothing of group consolidation that you can ask me nishinde. Ikinishinda basi, hakuna accountant mwingine anawezana nayo. Because I've seen it all, both locally here and internationally. So whatever experience I'm giving you here is top notch. Right? And that is why we are here to help you. So na make sure umeuliza maswali kali. Hapana uliza maswali ukiogopa. Right? Hapana uliza maswali ukiogopa. Alafu nitashare na nyinyi hata ile tool ambayo tunatumia to consolidate. You know, to consolidate, we have got very few tools in Kenya. For consolidation, you could decide to use, for example, SAP. SAP is a powerful tool. It will take the financial statements of the subsidiaries. Like now, there is one subsidiary we are doing, not subsidiary, group we are doing for Sony. Sony has 500 and something subsidiaries. So you can imagine now if you are working for group financial statements of Sony International with over 500 subsidiaries, and then you start doing them manually or using Excel. No, things will not work. But once in this case here, those particular companies have prepared their financial statements, what I will only want is them to export their data to my system. Each of those companies, including the parent. From there, what will I do? I'll simply touch a button which runs an algorithm which runs all that transaction. It will give you goodwill automatically. It will give you NCI automatically. It will be able to give you what we call PAP. PAP stands for post-acquisition profit here for each subsidiary and do the subdivisions automatically like that. Very interesting. And that is why whenever I hear people saying that accounting is boring, I simply conclude that people do not know accounting is the most superior job you can ever get, right? Aya, so umeniambia ni hebu hesabu vizuri. Unajua lazima uinue mikono juu. Uinue mikono hivi. Unajua kuna month of January, February, March, April, May, June, because we acquired this thing at the end of June. So June must be included. So you are right. So we are talking about how many months? We are talking of 6 months. I'll be able to answer that question in a moment. 6 months. Sasa hiyo ndio group structure. I hope you guys have been able to write this. Mpaka hapo sasa. Kutoka hapo sasa ni kulete mnyama wa pili. Mnyama wa pili who is quite hard to lift from the room. And the moment you lift that particular animal out of the room, then everything is settled, is what we call net assets. We can't buy a subsidiary without accounting for its net assets. So working number two is what here is the net assets. Listen to me. I know this particular question has an associate somewhere, which I should have put what here in my structure. But for this particular session, I've told you my agenda is to show you how to get goodwill. We don't calculate goodwill or goodwills of associates. No. I'm at the introductory stage of this topic. Ndio maana nimeacha kala ka associate. Right? So nimeenda kwa net assets. We don't look for net assets of associates. We look for net assets of what here somebody? Net assets of subsidiaries. Now, can somebody, ladies and gentlemen, talk to me? When you hear somebody mention the word net assets, what comes to your mind? When you hear anybody mentioning the word net assets, what comes to your mind? Net assets, what comes to your mind? Thank you very much. It's equity. It is reserves. I like that. These are students who have been able to remember very fast that we have what we call an accounting equation. In the accounting equation, we have assets equals who? Assets equals who? These assets are normally financed by the owners. Equity. And then, of course, we have in this case here, what here? Somebody, we have the liabilities. We have the liabilities. Anytime you see, for example, you see RCM Online College with the good work that we are doing, we can't have like the owners only financing a good company. A good company will always be, as a result of what here, the assets will always be financed through equity and debts, liabilities. Now, again, if you remember, when you take assets, you subtract liabilities. This, when you take assets minus liabilities, you'll get something we call what here, somebody? Net assets. For those of you that I teach management accounting, you must be quite cognizant of this equation. That assets minus liabilities. Assets minus liabilities equals who? Equals net assets. Mwalimu, we are not now understanding you. There is something I'm trying to draw your attention to. That if you take these liabilities on the other side, if you take the liabilities on the other side, it will be assets minus who? Minus liabilities. Will be equal to equity. Now it is sinking down slowly. It's sinking down slowly. That this side are identical. Meaning that equity will also be equal to who? To net assets. Equity and net assets will be the same. So in group consolidation, whenever they talk about net assets of the subsidiary in your second working, then straight away know that you are looking at the equity side of the subsidiary. Equity side of the subsidiary. Equity side of the subsidiary. So then what will I do? I'll come straight away and look at my equity at acquisition, equity at acquisition, equity at acquisition, and equity at reporting. Remember, net assets, you normally account for net assets of the subsidiary. In those two timings, at acquisition and at reporting, when we acquired the subsidiary and when we are reporting in the financial statements. I can see a hand up. That is NN, a student. Unfortunately, given the kind of noise background that my students are in, Nana, I can't give you rights to unmute yourself. What I would recommend, NN, is that you write your question in the comment section and make those questions public. Everybody should be able to see. Everybody should be able to see the questions you are asking, because really we are here to learn, all of us together, all of us together. And then I would always want to pick, feedback from you up to now. Are we together? Are we together? That when you talk of net assets, we are looking at the equity component. Equity component. When you talk of net assets, we are looking at the equity component. Thank you very much. It's only Langat who has said yes. Only Langat. Perhaps the other students would want me to repeat. Thank you very much. And then when we talk of the equity side of the financial statements, we are not talking of very big things, no. When we talk of equity side, we're only looking at 4 things to be precise. We are looking at the share capital. Share capital. We are looking at the share premium. Share premium. Share premium. We are looking at the retained earnings. Retained earnings. Let me write this in full. We are looking at retained earnings. Retained earnings. And then we are looking at the fair valuations, the fair value adjustments. Like when you do your revaluation. When you revalue upwards, of course, that upward revaluation goes towards boosting what here? The equity of the owners. So if I'm the one, even up to now, even when I'm practicing this thing, whenever anybody talks of net assets, I'll not even think twice. I'll list these 4. The other things will come in as I read the question, but these 4 must be there: share capital, share premium, retained earnings, any fair value adjustment. Initially, the fair value adjustments, we used to call them what here? We used to call fair value adjustments revaluations, but now they changed the name. They changed the name. So now straight away, I'll be able to share my screen with you. And the time is not on my side. I promised 10 minutes. I've taken more than 1 hour. Will you guys give me a chance of finishing this question up to goodwill only, or we stop here, we pick up from tomorrow? What will be your recommendation? Can I just continue up to goodwill computation, or we stop? Because I would also want you guys to eat lunch. I would want you guys also to eat lunch. It will be very unfair to have guys who have money in their pockets and they can't eat lunch. Oh, we finished. Thank you very much. Thank you very much. Let's finish this. So we start with share capital. This is the ordinary share capital. Please, usikachukue share capital ya parent. Hapa ni net assets ya subsidiary. So share capital ya subsidiary hapa ni 200,000. 200,000. Kumbukieni, ladies and gentlemen, kwamba subsidiary share capital, it rarely, for all the years I've been doing these consultancies, a group consolidation, utasikia ati share capital, I mean, a subsidiary imekuwa acquired today. Tomorrow ends up issue new shares. No. For ordinary share capital, normally at acquisition kama ilikuwa ni 200,000, pia at reporting inakuwa the same. 200,000. The same case in this case here with who? Share premium. The same case with the share premium. Like now here you can see the share premium of the subsidiary was 50,000. The share premium was 50,000. So in this case here we have share premium. So share premium will be the same. At acquisition 50,000, and then we have 50,000. The same case with the fair value adjustment. The same case with the fair value adjustment. So the fair value adjustment, what do we have here for fair value adjustment? There is a place they'll tell you, like now here. The fair value adjustment, they've told us here the fair value of the assets, liabilities, and contingent liabilities as at 1st January 2019 were equal to their carrying value with the exception of a machine, which had a 6 years remaining useful life on 1st January 2019. 1st January 2019, it had how many years? It had 6 years remaining. 6 years remaining. 6 years remaining. But ladies and gentlemen, the most important thing here is for you to know that this fair value adjustment at acquisition was 60,000. Remember, my figures here are in terms of thousands. So all these figures here, I'll be knocking the 3 zeros away. So the fair value adjustment, fair value of the assets, liabilities, and the contingent liabilities as at 1st January 2019 were equal to their carrying value, with the exception of a machine, which had a 6 years remaining useful life of what year? On 1st January 2019. Let me repeat this. Were equal to their carrying value, with the exception of a machine, which had a fair value of 60 million in excess of its carrying amount, in excess of its carrying amount, in excess of its carrying what year? Carrying amount. Meaning what? There was a fair value adjustment upwards, because we are told here that the market value, which is the same as fair value of that asset was higher than the carrying value. Carrying value is the same as book value. It's the same as net book value. So the fair value was higher by 60,000. So in this case here, what I'll do, I'll come and say here, fair value adjustment at acquisition equal to 60,000 upper. In the next class, I'll be able to show you how basically this works out. For now, in the interest of time, weka tu stop, nitakuonyesha kitu, niweze kujua kwa nini kuambia how to handle this. Because ideally, fair value adjustment, you should have here 60,000, 60,000. But remember, there is the depreciation aspect. Weka depreciation. Nataka kwenda kwa hiyo maneno sasa. Weka kwanza tu star namna hiyo kwanza. Haya, twende kwa retained earnings. Retained earnings, ukiangalia vizuri retained earnings, what do we have under retained earnings? Under retained earnings, this is what they have told us. Under retained earnings, this is what they have told us. Remember, this is retained earnings at reporting. Retained earnings wamesema ni 502 at reporting. 502, 540. 502, 540. 502, 540. So retained earnings at reporting ni 502, 540. Retained earnings at reporting is 502, 540. But now, how do we calculate? Because in most cases, they'll not be able to give you retained earnings at acquisition. How will we calculate this? There are good examiners who will tell you that retained earnings at acquisition was 400,000. But most examiners will never tell you that. Most examiners would want you to do a working for retained earnings at acquisition. And this is what we shall do. Listen, we'll have here retained earnings. We'll have retained earnings for the year, or rather retained earnings at the beginning. So at the beginning, hautakuwa nayo. At the beginning, hautakuwa nayo. Tuko na retained earnings for the year. Retained earnings for the year. Hiyo utakuwa nayo. Na tuko na retained earnings at the end. Retained earnings at the end. At the end, ambao umeniambia ni 502, 540. 502, 540. So ile kitu ya maana hapa ni kutafuta retained earnings at the beginning. Retained earnings at the beginning ndio kitu ya maana zaidi. Retained earnings at the beginning. Hapa ni XX. Then we have retained earnings for the year. Retained earnings for the year sio ngumu. Retained earnings for the year wametuambia namna gani retained earnings for the year? Watakuambia hapa mwisho. Wametuambia in the year ended 30th June 2019, Horizon Limited made a profit of 56,800. So Horizon Limited made a profit of 56,800. 56,800 minus, these guys, do they pay any dividends? Yes, they are telling us, out of which it paid a dividend of 20,000. I'm removing the 3 zeros. Out of which it paid a dividend of 20,000. So remember, these guys got a profit of 56,800. But they paid dividends of how much? 20,000. They paid, in this case here, they paid dividends of 20,000. So how much was retained? How much was retained? Remember, in the whole year, they made a profit of 56,800. And then, ladies and gentlemen, in this case here, they paid dividends of 20,000. So how much was retained for that year? How much was retained for that year? 36? Lucy, we don't use that language. Once you realize that the examiner has chopped 3 zeros, you also keep on chopping 3 zeros. You also keep on, Cyrus, you don't use that language. Once you realize the examiner has chopped 3 zeros, even in all your discussions, you keep on chopping the 3 zeros. So it is 36 what year? 800. It is 36,800. 36,800 like that. 36,800 like that. 36,800 like that. Right? Yes. Because you see, let me repeat this. I'm trying to rush a little bit. But I'll be able to ensure that all of us understand. In the year ended 30th June 2019, Horizon Limited made a profit of 56,800. This is the profit we declared, or rather we made. But at the same time, the same year, we paid a dividend of 20 million. So meaning that in the same year, we retained 36,800. 36,800. Thank you very much for following there. Now, ladies and gentlemen, listen and listen to me very well. Listen and listen to me very well. We had retained earnings at the beginning of X. We added some retained earnings in the year. So what do we have somebody here? We have X plus 36,800, right? Which will be equal to what here at the end of the day, which will be 502, 540. So could you kindly give me the value of X? Kindly give me the value of X. 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 It can't be 539. It can't be 539. Remember, this is a plus. When it crosses over, we expect it to be a minus. When it crosses over, we expect it to be a minus. It cannot be 23. You know, this is 502,540. This one here, 502,540. So it is 465,740. It is 4. So somebody is telling me that this X is 465, 465, 465, 465, 465. Somebody is not talking to me. Somebody is not talking to me. 465, 740. Is there somebody who's able to get that 465, 740 as X? Is there somebody who's able to get that 465, 740? We are finishing in the next 5 minutes, 465, 740. Now, I would want you to listen and listen to me very well as we finish this. As we finish this, please listen and listen to me very well. We have at the end of the year, our retained earnings were 502,540. This is retained earnings at the beginning. Retained earnings at the beginning of the year. Beginning of the year is 465,740, like that. But you see, what are we after? We are after retained earnings at acquisition. Acquisition came right at the middle of the year, 6 months. Remember the concept of 6 months. So you want to get retained earnings at acquisition here. This is the date of acquisition. So then how do we get retained earnings at acquisition? I wish I had the good time even to demonstrate this. To get the retained earnings at acquisition, I'll take the average of the two. I'll take the average of the two. I'll take this plus this. Please give me an answer. I'll take this plus this divided by 2. Why am I saying this? It's because this acquisition, remember, happened mid-year. Happened mid-year. And the retained earnings you had, it was for a whole year. This one I've always seen students confusing quite heavily. I've always seen students confusing this quite heavily, right? So somebody is telling me it's 484, 140, 484, 484, 140. So could you then kindly come and give me the total? Give me the total as we finish. Give me the total net assets at acquisition. Please add total net assets at acquisition, total net assets at acquisition, total net assets at acquisition, total net assets at acquisition. Itakuja ngapi total net assets at acquisition? Alafu uzuri ukishatumia hii method, all the other things zinaingiana 100%. Take it unasema ni 124. Take it unasema ni 124, 124, 124, 4140. Can somebody in this case here give us confirm this figure? 124, 4140. Wanasema ni 779. Hebu angalieni vizuri. Umechukua 2 at acquisition plus 50,000 plus this plus 60,000. Wamekataa hiyo figure. Wanasema ni 794. It is 794, 140, like that. So 1 minute now. 1 minute tumalizana goodwill. So then how do we get goodwill at acquisition? How do we get goodwill at acquisition? To get goodwill at acquisition, this is normally what we do. Here, I'll use what we call the full method. Why am I using full method? I'm using full method because they have given us NCI. They have given us the fair value of NCI at acquisition. They have given me, somebody has come up with a different figure, or PO, I think, or PO has a different figure. Okay, we'll be able to confirm this, but for now, this is what we have. This is what we have. They have given us, ladies and gentlemen, look at this. Look at note number 3. The fair value of NCI in horizon on 1st January 2019 was estimated at 150,000. I can't call it million because I'm being consistent. 3 zeros have been removed. At 150,000. At 150,000. At 150,000. At 150,000. At 150,000. So whenever you are given NCI, value of NCI at acquisition, the examiner does not want you to use partial method. We only use partial method whenever we are not given NCI at acquisition. If you're given NCI at acquisition, I'm repeating again, we shall use full method. And full method is quite an easy one. You'll come and give us the consideration. You'll come and give us the consideration of the parent, right? At acquisition, of course, you take it that way. Give us consideration of NCI. NCI stands for what in full? Non-controlling interest. Non-controlling interest you add, and then you'll get the total there. So you'll get the total there, and then we'll come and the less net assets at acquisition. Net assets of the subsidiary at acquisition. You'll come under less the net assets of the subsidiary at acquisition, you less. Net assets of the subsidiary at acquisition, which in this case here, you guys have already given me a figure. Let me take it as X. And then whatever I will get here will be called goodwill. Goodwill at acquisition, like that. Goodwill at acquisition. Goodwill at acquisition. Please let me know whether you've been able to write this up to there. Let me know whether you've been able to write this up to there. And remember, you are getting this free of charge class from RCM Online College. RCM Online College, ladies and gentlemen, has great online tutorials where we will charge you. You've got 3 packages, basically. We have a video package alone. You pay us $3,500 for videos covering the entire syllabus. Number 2, we have the Zoom module. You pay us $3,500 and then you attend all classes, including revision. Live Zoom, $3,500. You can also come and combine the two. You go for a combo. A combo, what do we have for a combo? You are paying for videos plus what here? Zoom classes, and you get to save. If you go that approach, you get to save. You only pay us 6,000 Kenya shillings. If you're interested, of course, you are aware of our number. It is 0719. This is our number, 0719 525,000, like that. Now let's finish up this. Now we have got everything. Ours is simply to plug in figures. So have you finished writing? Have you finished writing, including our phone number? Have you finished writing, including our phone number for inquiries? Finished? Yes or no? Yes or no? Finished? Yes or no? Yes or no? Yes or no? Finished? Finished? Finished writing? They're not talking to me. They're not talking to me, and I'm here to help them. They're not talking to me. In short, I'm asking you, can I rub? Can I rub? Can I rub? Can I rub? Yes. Now we start right away. We start right away, ladies and gentlemen, and I would really love to teach you another session because I underrated this question. Yes. Now here we are. Here we are, ladies and gentlemen. We are told here that Beyond Limited acquired 80% of the ordinary shares of Horizon Limited on 1st January 2019. Beyond Limited paid how much? It paid 650 million. So you say there, straight 650,000, I mean. You say straight away there, the parent's consideration, how much the parent paid. You're getting parent's consideration. The parent's consideration. They paid 650,000. My figures are in thousands. I have to chop only 3 zeros. So the parent's consideration has been given. Now from there, what else are they telling us? It's made up of cash of 650 million paid on 1st January 2019. And a further cash payment of 147 million deferred until 1st January 2020. 147 million, 147,000. So we have in this case here parents, but now this time around it's a deferred consideration. So we have the parents deferred consideration of how much? 147,000. But when will this 147,000 be paid? Next year. So in this case here, we know that is a future value. If it's a future value, we have to discount it. We must discount it. So then this one, we must come and multiply it with the PVIF. PVIF. So then we'll need a cost of capital under the time period. I know time period will be receiving this money in a year's time. What is the cost of capital in FR? It's quite easy. The cost of capital will always be provided to you. Like in this case here, they have told us that the cost of capital Yes, an appropriate discount rate is what here? Is 5%. 5% is the appropriate discounting rate. So cost of capital here is 5%. The cost of capital is 5%. Now, I would want to remain silent a little bit. I would want you guys to give me the PVF. 1 year, 5%. Is there anybody who remembers the formula, especially the students I taught AFM last semester? Even the ones who are in 3 right now, I know you know the difference between PVF and the PVFA. I know you know the difference. I know you know the difference. Lucy already has an answer because Lucy has known that for us to be able to get PVF, we have a formula for PVF. It is 1 plus R raised to negative M. R is the cost of capital. So it will be 1 plus 0.05 raised to minus 1. So it will be 1.05 raised to minus 1, which will end up giving us what figure? Somebody 1.05 raised to minus 1, which will end up giving us what figure? 1.05 raised to minus 1. It's a deferred consideration, a consideration that will be paid in the future. Any future considerations, ladies and gentlemen, have to be discounted. Especially for Section 6, Section 3, I know they'll always give you just 1 year. Section 6, they'll tell you this 147 million will be paid per annum in the next 5 years. So you must know how to use PVFA. PVFA. So is there somebody who can give me these figures? We disappear from here. Want to disappear now? Want to disappear now? Want to disappear now? 0.9524. So in this case here, can somebody go ahead and multiply 147,000 times 0.9524? Could you kindly give me this figure? Kindly give me this figure. What do we have there? Somebody 147,000 times that. Somebody is giving me 140,000. Thank you very much. 140,000. Please don't forget that the parent never bought 100% of this subsidiary. The parent only bought 80%. We have another party called NCI. NCI who bought 20%. So come and give us the NCI's consideration at acquisition. NCI walinunua shares ziko worth pesa ngapi? Wamekupatia market value of those shares. Wamekupatia market value of those shares. Wanasema NCI ilinunua ngapi somebody? NCI, wamesema the fair value of NCI was 150,000. Was 150,000. So NCI here was 150,000. Then could you kindly give me the total? Kindly give me the total. 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 650 plus 140 plus 150,000. What is the total, somebody? Somebody give me the total consideration. 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 Inakuja ngapi? Wameniambia 940,000. Can somebody else confirm that figure? Can someone else confirm this figure, 940,000? Can someone else 940,000? And then, of course, now this is the total consideration. But this subsidiary itself is coming up with assets worth how much? So what are the net assets? Net assets of the subsidiary, net assets of the subsidiary at acquisition. Are you able to remember that figure you guys gave me? 700 and something. Was it 700 or 900 and something? Are you able to remember that figure? Net assets of the subsidiary at acquisition. Inakuja ngapi somebody? Net assets of the subsidiary at acquisition. Please remember very fast, we are away. Inakuja ngapi? Net assets of the subsidiary at acquisition. Hiyo figure mlikuwa umeandika tayari, ile column ya kwanza, net assets. Column ya kwanza, 794, 140, 794, 140, una subtract namna hiyo, and then now you'll be able to get goodwill at acquisition, goodwill at acquisition. So could you kindly subtract goodwill at acquisition? Sorry, I've gone beyond the time. Even myself, I'm supposed to have reported at my desk, but I know how important this is for your exams. So nasema goodwill inakuja 145, 860, 145, 860. So this is the goodwill at acquisition. Just like any other asset, this one it will also be subject to some loss in value. It will be subject to impairment. It will be subject to impairment. So ladies and gentlemen, that now marks the end of our today's class. I hope you have enjoyed, and I hope you've made a decision to join RCM Online College. Those are my prayers, that you guys will be able to join us right? We study these things together. Our rates are very easy rates, 3,500, right? Per paper for Zoom, 3,500 if you need videos for videos. And then we have 6,000 Kenya shillings if you would want to buy the two combined. So otherwise, thank you very much. Be blessed. I'll be able to tell you when we shall be having this particular class, but I think tomorrow. So have you learned something? Did you learn something over this session? Ama umetoka bure? Umelan ama umetoka bure? Umelan ama umetoka bure? Great.